Hello, this is Yolanda with Shaw's Administrative Services, here to give you another business tip with Yolanda. Today I thought I would focus on one thing that I see a lot when I am doing bookkeeping for clients, and that is a person that uses one bank account to do everything, personal and business. Let me give you a tip. It is always better to have a separate bank account for all business transactions. This is another way for you to keep up with exactly what is business expenses and what is business income. It allows you to know, again, what your business is doing, because you can look at all of your deposits for the whole year and say, oh, this is how much I made. Or you can look at all of your expenses for the year and say, oh, this is what I spent for the year. It also allows you to have a quicker way of reporting information when you're actually trying to do your spreadsheet, which I spoke of before, or when you're trying to get information over to your tax preparer, or if for some reason your lucky number is pulled to have an audit by the IRS. A lot of times what people don't realize is that when the IRS does an audit on a small business, a person that files a Schedule C, then that person is asked to present information to back up information that they reported on their tax return. So if, for instance, you have certain expenses listed, they're going to ask you, okay, show us proof, which would be your receipts. They're also going to show you proof of income, ask you for proof of income, excuse me. So if you were to show them some handwritten receipts that you gave to your customers, or handwritten invoices, that could show your income. They're also going to ask you for your bank statements, and that will show deposits. So you want to make sure you have everything clear cut so that the IRS doesn't come back and say, oh, this is all considered income because these are deposits. Or they can't come back and say, no, you can't write these things off as an expense because you're showing this as an expense on your business. This could also be an expense for your personal. So if you use your vehicle and you purchase gas, they're going to tell you, oh, this could be a personal use. And we're going to disqualify this expense that you put on your taxes. So now what I'm going to do is I'm going to go back and charge you a penalty for late filing or in filing an incorrect tax return. So then you get into penalties and interest, and you owe more and more and more. So in order to try to prevent that from happening, it is just a little thing that you can do, which is to open up a separate business account, have it in your business name, and only have your business transactions to go through that business account. All of your deposits, all of your expenses. You can get a debit card. Sometimes you can get a line of credit through that bank once they get to know you and you establish yourself. But it's just an easier, cleaner way of keeping your financial books together, and that is by having a separate bank account. So again, I thank you for listening. Don't forget, on my YouTube channel, I'd like for you to subscribe, share, and like. Thank you again. This is Yolanda. Have a good evening. Bye-bye.